we asked for your questions, and now we're going to answer them. All right, you guys all ready? Here we go. First up for you, Sarat. John in Indiana wants to know your opinion on Blackstone. That stock hitting a new all-time high today, and you own it.
Oh, we do own it. I owned it for a while. This is the private equity guys that we're talking about. But here's a company that has over $400 billion in asset management. This is a company that more people are moving assets to in a low interest rate environment. They're attracting more funds. They've just got a new real estate fund. It's got a great dividend. I like this. I think it's a great stock to have in your portfolio.
Okay, that's why you own it. All right, next to you, Joe. Jacob in Brooklyn asks if it's time to get back into Shopify, because Shopify was red hot. Now it's about 10% down in just the last week.
Down 10% in the last week. It was up 21% for the month of August. So if your time frame is longer than the next 12 months, which I believe it should be for a name like Shopify, yes, you want to be in Shopify. When you think about online, you think about Amazon, maybe you think about eBay. Now you have to think about Shopify because they've actually overtaken eBay. Made a smart acquisition this week, 6 River Systems, $450 million acquisition. That kind of gets them focused on fulfillment, fixes the infrastructure, gets that to a little bit of a better place so they can compete. So in the sweet spot, Canadian company, love it.
All right. Margaret, you ready?
Yep.
Jerry in Ohio wants to know if now is a good time to buy UnitedHealth, which you do own.
We've owned UnitedHealth for a long period of time, and I would just say it probably argues some patience right here. We have increased policy uncertainty. We had Nancy Pelosi with her health care proposals out. We have the Democratic debate is tonight. Elizabeth Warren moving up in the polls. I think healthcare in general will be policy, and managed care generally is, the first ones to be shot at in this market.
Yeah, going to be. I have a feeling that healthcare will be mentioned at some point in that 3-hour debate tonight.
Times.
All right, Jim, you ready? David in Florida asks, what's going on with Cleveland Cliffs? And you own that as well.
You bet. Hey, David, good question. The reason the stock was down in August is because iron ore prices collapsed. Now, hear me very carefully. If you are in this stock, any of you, because of iron ore pricing, you're missing the big picture. Don't worry about iron ore pricing. You've got a CEO, Lorenzo Goncalves, who is running this company like no basic materials company has ever been run. He has cleaned up the balance sheet. He buys back debt opportunistically for pennies on the dollar. He is going where the market for steel is going, which is away from blast furnaces to electric arc furnaces. He's got a new plant coming up for hot briquetted iron. Now, listen, I'm giving this all in a snapshot. Go to the company's website, listen to Lorenzo Goncalves, his speech from 2 days ago at the Credit Suisse conference, and that will tell you all you need to know. You have a CEO here that is going to be talked about for years.
All right, and finally, Katherine in St. Petersburg, Florida writes for Josh, I got into Shake Shack. Thank you. I'd like to add to my position. When would be a good time?
So if there are 2 things I know, it's strategic asset allocation and bacon cheeseburgers. And this is the type of name that I am not trying to time purchases with. I bought it when it first came public at 40. I bought some more in the 20s. I have not bought any since. So I'm up more than triple on my initial buy. And I'm not looking for opportunities to buy more of it because I own a whole portfolio and I don't want this to become outsized relative to other investments that I have. So that's the answer for me. Unfortunately, I don't know if that's the right answer for you or for anyone else that's listening. So I would just say, think about how much risk you want here. This is a stock that could drop 10%, 15% in one day for any reason. That can happen with any publicly traded company. So maybe use that as your guideline rather than anything specific about Shake Shack.
So if it's
itself.
2% of a portfolio, it's one thing. If it's 90%, don't add more.
These questions are tough because it's not about the stock. It's about the person and their own situation. And it's really tough to give like a straight answer. So I'm not dancing. I'm staying long the stock. I just can't tell what else you're doing and then, answer it that way. So, right. But congratulations for being invested.
And doing well. Strategic onion allocation.
And thanks for watching the show.